Cool. I'm just gonna start with EG. I didn't look at GU at all this week. I'm pretty sure there were some pretty good opportunities. I'm sure a couple of guys are still in from here, a couple of guys still in from here. The bias up isn't technically invalidated just yet. All right. So here, one leg up. Structure break. All right, essentially minor pullback to another higher high. But we saw this, and this was pretty alerting to me. I didn't understand if we would just react from here or if we would essentially consider this a full structure break. But just because we literally took liquidity, reacted and broke intraday structure points, the overall narrative did go higher. But it's not something I would personally trade. Mainly because this entire structure could still be corrective. Same thing with EG. Right, this entire thing could still be corrective, which is why I actually looked for hedge buys down here, right, which you talked about on Wednesday. Right, so looking at structure points, right, so our recent one took out our low, solidified low here because we led to intraday structure breaks, right, which essentially initiated the pullback, right? So the thing about here, right, this is my swing structure, right? But in order to allow a pullback to occur, you must first break intraday structure, right? Which is exactly what happened here and here, right? Which is what we talked about on Wednesday. So this is the interesting part. If we know this is our swing structure leg, then we know this actually led to that full break of structure. This is the actual leg that led to the structure break. So in my eyes, this is my point of invalidation, right? The point where if we take this out, then I would assume a bullish bias overall, right? Because that would show that there's no more effort bringing this down, and it's more so converting itself into obviously a higher move up. But the cool thing is that if we break this entire swing leg, then you have a very clear target up here, right? Unless we show an unwillingness even beyond this, right? And then continue lower, because there could always be a possibility we actually react back in this daily potential zone of interest. And I only call it that because, right, this is the last candle that potentially mitigated something here that led to that full move, right? And so this wick could essentially be a potential mitigation point of interest. All right, is it realistic? Honestly, it's not the most realistic, but definitely something to keep an eye on, right? But I really would hate to see this obviously be taken out, right? Because there's always a chance, right, that could have been, this entire move could have been a liquidity grab, right? And then even though we're showing corrective nature, right, if we have no bullish structure breaks to the upside, this won't sustain itself to go higher, right? And we've already essentially reached a pretty much a low here. So it's 50-50 to me. Right, as we talked about, right? This was our bullish structure break, right? And then this low led to this final higher high here, right? So this led to that full break of structure. This is my point of invalidation for this hedge buy, right? And as you see, right, we actually came back to potentially mitigate whatever was in here, right, and led to minor intraday structure breaks. But right now we're looking at the inverse, right? I actually took a position here, right, and this led to the structure break, right, leading, this is my point of invalidation, right? So we now have 2 points of invalidation. Right? And even though this has shown a bullish mitigation, right, we've also shown bearish mitigations, signifying potentially bearish order flow. Yeah, I know Sean's in from here, right? Unfortunately, I didn't get this. And yeah, definitely point of interest here would have been that wick, right? That was the final push up. Right, this wick pushed up to take out a previous wick, right, which is there, and that's where price reacted back from, signifying, right, bearish order flow to the downside. All right, so realistically here, either we take out structure here, mitigate something, continue higher, right, or we push right through it, right, take out potential liquidity here, right, potential liquidity there, right, relative equal lows. So there could be a scenario where we mitigate, continue higher, or there could be a scenario where we continue bearish order flow to take out this structure point. And if we take it out with momentum, we'll definitely take out this, right? Which would then signify an intraday break of structure to the downside, which supports the overall bias, right? Which is still bearish. And then once you see that leg show itself, you can easily find a correction to in continuation. Right, so I'm really trying to see which point of invalidation we take first. That's all it is. All right, now going to the interesting one. All right, so I talked about this, I think, when did I send you guys that chart? When I talked about structure on DXY. All right, we talked about it on Wednesday a little bit, I think. All right, because there was two scenarios. There was a scenario, right, where this could have been liquidity. Liquidity was cleared, led to a bullish break of structure, and could have continued, right? But remember, this entire structure is still bearish, right? Bearish structure, bearish structure, right? And we're still essentially playing off of this narrative here, which is the weekly inefficiency fill there, right? So if we're basing it off of pro trend on a higher time frame, and we're playing it based off of the narrative from this weekly inefficiency fill here, right? Even potentially monthly inefficiency, right? We're talking big move, right? And this is what you guys have to understand, right? Which is why I haven't sold EURUSD in a very long time, for that single reason, right? And as we've talked about, as a swing trader, I'm willing to wait for a trade as long as I'm willing to hold for trade, you know? So now that we're with the mindset of the weekly inefficiency fill, right? If we're playing off of this narrative here, right, we led to a structure break, return to a premium, right, inside of this wick here, right? Notice that wick, this wick took out that previous wick, right? Led to a move down, right? Price came back, but didn't mitigate the open of that candle, right? So we came back one time, and then we came back for liquidity grab, right? And this was the true narrative in my eyes, right? This is what I showed you. This is the chart I showed you guys when we were right before election time, where I said, right, this could have been a bearish structure break because it's pro trend in a higher time frame, right? So once you realize that, you now realize that it does not make sense to sell EURUSD in any way, right? Because there is so much effort. There is so much effort, right? After this insane drop, there's so much effort to bring this up, right? Hence, right, the corrective structure, right? Whereas when we actually give the pro trend move, it's relatively straightforward. How are you supposed to? You aren't supposed to know about it, bro. This happened during Asian session. Right, this was Asian, and then this was London. Right, there isn't necessarily too many opportunities, right? But if you understood the whole bias, you probably would have been in from higher, right? So the liquidity grab here, right? And what are you guys confused with a structure break and a liquidity grab? It's very straightforward. I don't know why people confuse it so much. Right, who here can tell me the difference with an LG and an actual structure break? Quick move, close. Close above high, that's subjective to time frame. I don't like saying that. That's subjective to time frame. Sometimes you don't need to play it, bro. You didn't see me play the EURUSD buy. Why? Because there's no reason to get into risk even if I know the bias. Like that's an issue too. You don't have to catch every single move, right? I didn't catch the EURUSD buy. That's fine. Why? Because I'll get another opportunity eventually. All right, we'll look at EURUSD, see if there are any opportunities. I personally wasn't even looking at it. And with the uncertainty of the elections, nah, not worth it. Not worth it at all. Right, so that would have been considered a structure break, right? But this election move here, right, which is a news, which is based off the catalyst, right, led to a liquidity grab. A liquidity grab means you react right after you take out liquidity, right? I don't get the confusion between a structure break and a liquidity grab. Right, this substantially created a new low, whereas this just took the low and reacted. But yeah, I mean, the bias is right. Don't really care if I caught the trade. All I care about is getting the analysis right at the end of the day. All right, clear liquidity, right, reached a premium, right, and delivered beyond previous structure point. All right, looking at EURUSD, all right, a lot more messy, right? Personally, nothing that I would have personally wanted to catch. Is it possible to catch this move here? 100% if you understand what a liquidity grab is. Let's see. I don't know why my computer is doing this. It's never done this. This webpage is using significant energy. That's so annoying. It's never done that. All right, so this is right at London, I believe. All right, this was the initial reaction beyond. This would have been inefficiency fill. Right, don't necessarily have to catch the exact low. Just more so want a reaction. All right, I'm not gonna go into seconds time frames here. Just use the entire candle. All right, this top of a POI, right? Consider that a liquidity grab, right? Then led to an actual structure break here, right? Because it was actually sustained, right? Then we came back, unsupported volume, top 50%, anywhere here makes sense. Pretty big stop, yeah, 6.5. And then beyond that, anything that would have made sense. Please mute your mics unless you're asking a question.
You can hear me?
Yeah.
All right. So right where you drew the let's see. All right. So if you look left, right, did that break a scalping structure or
Nope. Nope.
a micro?
Yeah, that would have been a micro. This would have been probably your scalp. Minor entry to your scalp here.
Right.
Which is why,
So
like I said, I didn't
what
take any of these.
what did it mitigate before it went back down into point of interest?
The liquidity, previous liquidity.
I could draw it. If you open it up. No, I just mean, can I draw it?
Draw what?
Can. I wanted to actually show you what I just meant. So you could zoom in some more. So I was meaning right, basically here.
What is that?
I was wondering if it's a scalping break.
Don't worry about that too much, bro. Don't worry about too much until I release the new information, because me trying to explain this to you is probably going to confuse you more than what you're already confused right now.
I mean,
yeah.
I'm not confused. I'm not confused, but I just wanted to know. But I'm sorry.
This fucking dog, man. Fucking, where's my thing? I'm sorry, guys. This fucking dog. Don't know where the hell my dog whistle is. I'm sorry about that. But yeah, let's see. Is this what you mean here? Is this what you mean here?
Oh, all right. I see it now.
That's what you see here.
I see it now. Yeah, that's what I was meaning. Yeah, but I was thinking about this. I knew this is the actual break, some sort of break of structure.
Mm-hmm.
So, yeah, it went down, it mitigated something. We found your POI, and then it went up to the top. So that's what I was trying to figure out, where did it break. So I saw it.
Yeah, and the confusing part here, though, is the fact that even if we break bullish structure, this is your point of invalidation.
Right. We're still bearish, basically, because it didn't break
the full structure there. Mm-hmm.
Right. All right, cool. All right.
So essentially, this would have been a much better opportunity, right? But very, very sloppy. And then, like I said, it's uncertainty with the elections, so I'm not stressing any of these moves at all, right? Because there was, I'm pretty sure there was one opportunity this week inside of New York. Where is this? Never mind. Cool. Which is probably around here. No, that was Asian. No, yeah, like as we see here, there isn't really too many opportunities during New York. Right, and once I saw that we took this high out, right, the only realistic way I'm gonna take a trade in this scenario, right, whether I use this low or this low to this high, is if we come back and touch previous structure. That's the only way I'm gonna want to take a trade, right? But if you never reach it, I'm not gonna be inclined to want to take the trade. You know what I'm saying? So it's okay. Don't have to catch every trade. All right, GU, same thing. All right, too sloppy in my eyes. Were there setups? Probably. I'm pretty sure you guys caught some setups, right? Because looking at structure, right? This is your break of structure, right? And we actually came back into a premium, right? Essentially took liquidity here, right? And this isn't the move that I'm trying to play off of, right? Because if we go structure break, right? Corrective structure, came back, and then took off, right? Let's see. Right, so notice this candle here. Right, this candle signifies to me the final push down before we actually erupted to the upside, which led to a structure break, right? Essentially showing me that there is, right, any type of SC inside of there. So right, you don't necessarily have to play this reaction, right? Because even though this is the POI, my point of invalidation is here, right? If we break this line, that's my point of invalidation, right? Which, if you then want to play based off of the reaction of potential POI, right? We didn't break structure. Right, there's no real volume, right? And we're not even in London session yet, right? So even if these scenarios are wanting to play out, the actual how do I say this? The actual probability of trying to catch any type of trade here is not really too probable, right? We're not in an optimal time of day, whether it's New York or London, right? The price didn't actually react fully off of these desired POI, so that's already alert number one. All right, we didn't break any structure. That's alert number two. All right, alert number three is we're not in a particular session. All right, so there's no real confluence. So all of this really would not make sense for a trade in my eyes. Right, maybe it could for you. Right, but it really doesn't make sense for me to want to take these trades. Really doesn't make sense. Could you see UJ? I don't trade UJ. I don't trade UJ. Yeah, like for example, this is still perfect bearish structure, even though we're showing corrective nature.
Sorry, I asked for the UJ analysis as I trade UJ.
I don't do that, bro. I don't just break down random pairs for that. Why? Because that's your job. These are your pairs.
No, I did do a breakdown.
Then let's see.
There is something that I was drawing similarity to, which was the DXY analysis that you showed a while ago. I had on the 1 hour like 3 nice bullish drives, right, going up that appeared to be
Where?
clear 1 hour structure. But if you look to the end where we had that wick at the top, where we look like we have equal highs, it reacted with some inefficiency.
You have to show me, bro. I don't know what you're saying. Please just annotate on my screen.
Alright. Let me pull up my chart.
Trading Lab, episode 96.
On the 1 hour. have here something like this, and then
Just plug in the machine for me and start it. It would have gone at least 5 minutes already.
Okay, what about this? What about this?
Sorry about that. Right. So something like this. I think 1, 2, 3, 4 bullish going straight up.
Yeah, but what about it? What are you trying to say, bro?
I was in somewhere here going up, and I was just expecting a bullish continuation, but if you look at straight across here, I think there was some inefficiency that it reacted with on either the 4 or the 1 hour chart. I'm saying when it started to pull back here, I would have known to, jump off.
When it started to pull back where?
Here, when it reacted with inefficiency here, like you left, came back, broke structure, and then did this wick, and then just fell straight to.
Yeah, that's your breaker structure here.
So for your breaker structure, it has to take out what a leg that may
Substantially take out a previous point.
So not this that made the new high.
But bro, you're so focused on H1. What's your daily and weekly bias?
The 4 hours still looks bearish, and the daily still looks bearish as well.
Then why do you care so much about these intraday bullish moves? Why would you anticipate an intraday continuation if you literally just said to me your H4, your daily, is bearish? Pro trend. That's what it's about, pro trend. Right, no need to confuse yourself. Whatever's your pro trend, you have to follow that on your intraday too. Yeah, I mean, that's pretty much what it is, psychology. Greed. And it's not necessarily a bad thing because everybody goes through it.
But this is my thinking, like, if it was to reverse, right, trend, we would have seen that starting on the smaller time frames. So I was saying not until it breaks structure on the 1 hour, then would I be able to say, okay.
Yeah, but why are you trying to play a bullish H1 move when your H4 daily is bearish? You can't justify that, which is why I'm asking you the question. Right? If the only way for me to ever be bullish on this DXY is if this high breaks. Why? Because this is a very significant high that reacted from a weekly inefficiency. Right? Not only that, but this high that reacted from weekly inefficiency led to a structure break. So we're pro trend in our weekly, daily H4. Right? Because I literally just explained this too at the beginning of the call. Right? This structure break. The only way I would have considered this now a liquidity grab is if we took out this wick and immediately reacted and took out this point of structure. Yeah, but yeah, that's right. You do need a reason to buy. Right? You're trying to catch reversals, and that's exactly why you're going to lose those trades. So it's up to you whether you want to be pro trend, you want to be patient for those longer term trades, or if you want to just do intradays and see success with that. At the end of the day, it's up to you. Does that make sense? Because you're new though, right? You're new. You're like a week in.
No, a couple weeks to a month.
A couple weeks. Yeah, so you're a month in. Yeah, so I wouldn't stress it too much, bro. Right, like for example, these scenarios are very, very. These are very educational, seeing them happen live. Doesn't matter if you catch a trade, but seeing them happen, studying them, that's what matters.
Oh, sorry, the other reason why, and I think this was on the point of news. The other reason why I was so fixated on the buys because this was around the election time. So the market was moving really volatile, pushing, breaking all of these highs on intraday. So I was saying, based on the momentum we're seeing during that period, it was likely that it would have continued, or that's my expectation that it would have continued to just break those highs. But I had that weekly, I had that 4 hour or 1 hour inefficiency.
Where?
Drop from, I think it would have been somewhere here along this line. Around the breakout right now.
Right, but this isn't inefficiency, right?
Hold on. Sorry, let me look at this on my chart. Is the 1 hour? No, it's the 4 hour. Alright, you go to the 1 hour. Should I show you the area? It's at price points 105,319 on the 21st of October.
Here?
105.3. The exact point is 105.3.
What do you mean 105? There is no. This is 90s.
No, sorry, on UJ. My bad. Sorry, I just realized it's still on there.
So what, were you trying to buy this?
At that point, no. That was the area that I had marked off the inefficiency on the 1 hour when it started to fall, expecting that it would have came back and
which is where? What's the point? What's the point? 105.
105.343 on the 21st of October. Right about there. Right, so that was the area, right? So that was where I was expecting to go to. But I didn't trust that it would have, reacted that way, because on the 1 hour and on the lower time frames, you had those drives, those nice bullish drives that looked like, it was gonna take out that area.
Well, for one, right, you see high volume before the impulse starts. You see a big impulse, diminishing volume, right? So even if your bias isn't correct, because the diminishment is there, right, you're going to get the reaction at least. And usually that reaction will give you enough time to either break even, right, or to manage your trade properly, right? If you were to enter not even at the reaction, you could have entered there, right? And even if you enter there, right, and you see the bullish diminishment, right, you now create a scalping break of structure here, right, meaning you can go break even, because if we reach back up here, then your entire bias is invalidated, right? Which this led to a minor pullback to then another break of structure, right? So now when you're break even, right, you're targeting this as your TP1, right? And now that we've broken structure, technically, if we break this point, this is now very concerning, right? But we never broke that structure.
Alright, so this is my question, right? Right where you marked off initially, where we had the impulses, I was actually participating in those buys. But when would I know to jump out for the sales after we had the
because you had a POI. You had a POI, you're justifying a reason to want to sell against your buys. So why not? That's pro trend for 1. 2, reacted beautifully. See? This high led to break of structure. Right, H4. You're pro trend bearish. Pro trend bearish. So it's all structure, bro. But yeah, we can end it off there.
Depends.
Let's see. Done that liquidity grab thing. Where? I wouldn't consider this a liquidity grab. You can see that it took time before reacting. Right, this is H4 candle. Right, so we were here for about 5 to 6 hours. Right, whereas, see if I can see one here. And like even here. Right, there's only one candle. Right, the duration is only one candle when we took out these highs. Right, so it's an immediate reaction. And it reacted over there. Alright, so you see the difference between this and this? Yeah, bro, this isn't a pair trade. I'm not gonna stress it. Liquidity grab. No, there's this would have been a liquidity grab. If that's what you're saying. This here. Yeah, the duration. The duration right above we took this high. Right, immediate reaction down. Right, this took one full H4 candle. Right, this took a partial of a second candle. Right, it's all timing narrative. Yeah, but you also have to realize you're pro trend bearish. Right, even though this right is creating this low, right, and then this creates this low, this is my point of invalidation of a bearish bias. Because even if we break an initial point of structure, pro trend still bearish. But yeah, I think we can wrap it up there. 40-minute call. Yeah, I'll see you guys Wednesday. I want to see how dollar reacts to this so-called Biden presidency. Yes, sir. Yep. What's up?
Yeah. So why would you consider we put that small vertical red line? Why would you not consider invalidation if that broke?
This one? You're talking about this one?
Yeah. No, that one.
Well, for one, look at the immediate reaction post that,
Okay.
right? And two, if we go to our right, this to here, that's a major intraday leg. This is another major intraday leg. This full thing is a swing leg.
Right. Okay.
Right, does that clear it up?
Right. I see. Okay.
Cool.
All right. Thanks.
It's just like it's the same concept as smaller time frame, where if you have a micro break of structure on a minor intraday move, right, that minor intraday doesn't reverse. All it does is create a pullback. It's the same concept.
Okay.
Does that make sense? Like
Yeah.
pretty much like every loss that majority of the members take are from trying to guess lows from micro and scalp breakup structures that are just intraday pullbacks.
Yeah.
Right, so even if you were to consider this a major, an intraday break of structure, this is still your swing leg.
Yeah. Okay.
So does that make sense?
Yeah, it does.
Cool, cool.
I appreciate it. Thank you.
Some of them get confused if it's gonna react in premium or it's gonna do liquidity grab. It's all studying your pairs, bro. Tendencies. Yeah, tendencies. And if you're not sure, just wait it out and then reference. See, it's like the same thing here for literally exact same thing, right? Minor intraday, or you could say major intraday, swing leg, right? Intraday break of structure, swing structure still intact. Same, literally exact same thing as here, right? So who's to say that that isn't something that UJ tends to do, right? Take out one level of structure but still maintain the overall level of structure, right? But that's just off of these two scenarios, right? But those are the types of things that you want to look for. But yeah, are we good there, guys? We good there? Cool. Yes, sir. Y'all have a great weekend.
I don't know what that means.
What the hell?
If you like, I can search the web for. Hey Siri, I have a great weekend.
All right, guys.